There is the U.S. futures picture with the Dow contract up and the S&P 500 contract also in positive territory. The NASDAQ 100 futures contract treading water at this moment. Well, here's a look at how precious metals futures are trading right now. You can see both gold and silver are in positive territory. They both had big runs in 2024. Our next guest says the threat of universal tariffs continues to disrupt the metals market, however. Daniel Ghali is our next guest. He's senior commodities analyst at TD Securities. Daniel, thanks a lot for coming in.
Yeah, thank you, Paul, for having me.
Tell us about this. This is an interesting concept that tariff threats, and we know where they're coming from, and we know the possibility of response from other countries, including Canada, are disrupting the markets for precious metals.
Yeah, absolutely. I mean, it's hard to see it in flat prices, but over the last month, there's been a huge disruption in precious metals markets where the threat of universal tariffs on metals is leading traders around the world to bring metal in from London and other global venues into the U.S., only to hedge against the risk that tariffs will be implemented on precious metals. Historically, they haven't. Precious metals have been considered money in effect. But if they were to be considered or subject to tariffs, then traders holding short positions against metal that they actually hold somewhere else in the world would be subject to a substantial loss. And in order to hedge against that risk, they're bringing metal into the U.S.
This is physical metal coming into the U.S., is it?
Absolutely, right. Yeah. And what's interesting here, Paul, is that it can inadvertently lead to a stock out in the world's largest metals vaulting system for silver in London. Right, this is the biggest story in commodity markets right now, I think, is that silver markets seem to be just completely sleepwalking into a potential stock out.
And what's a stock out?
Well, a stock out is a moment in time where the inventories of the metal cross a critical threshold below which the microstructure is challenged, right? And so if you think about how the world trades precious metals, physical precious metals, the global venue for that is actually sitting in London. But most people actually use US-based contracts to hedge price risks. So the challenge here is that the threat of universal tariffs is leading metal to go from the world's largest venue into the U.S., depleting that inventory buffer that traders use for over-the-counter transactions every day. And mind you, we're now in a fourth consecutive year of very substantial deficits in silver. And so this trend of depleting inventories was already set up. And this is simply something that's accelerating that process.
So this sounds price positive for silver in particular. Is that correct? And we're seeing silver trade at about $31 US right now.
Yeah, absolutely. I think there is the potential for explosive price action in silver if we do meet that critical threshold. We've seen glimpses of this in other commodities over the last few years. If you recall, copper last year had a very substantial rally on a similar theme. In previous years, palladium was a really good example of a market with a similar setup. And silver markets today just appear to be completely sleepwalking into this setup.
What do you mean by sleepwalking? That the price is not reflecting this this stock out possibility, this possibility that in physical inventories will get to a critically low level?
Yeah, the price is certainly not reflecting that. I also think that it's a very undercovered story.
Right.
So this is something that could potentially be very significant, but macro investors are just completely flat in silver markets, and nobody's really paying attention to this.
Is there information that retail investors can follow this story with? Or are there publicly disclosed numbers from London on silver inventories that people can watch to follow this story?
Yeah, absolutely. I mean, the LBMA, which is the custodians of the metal, they publish some data on their vaults on a monthly basis, so you can certainly follow that. There's a lot of work that has to be put in order to try to estimate how much of that metal is actually freely available for purchase. So there might be 1 billion ounces sitting in London vaults, but only 300 million of that is actually freely available for purchase, according to our estimates.
So do you have a call on silver, on the silver price?
Yeah, we think silver is going to end the year closer to $40 an ounce. So the substantial gains from today's prices.
Wow. What is your call on gold?
Well, gold is an interesting one, right? We actually thought there were some signs of exuberance heading into U.S. elections. If you think about the setup back then, you had central bank buying activity actually substantially slowing. Macro funds who buy gold for to trade, the Fed outlook, the global economy, and so on and so forth, were holding extreme long position sizes. So at the same time, the physical market had ground to a complete halt. There was a complete buyer strike. But you fast forward to today, and there are signs that the buyer strike has finally ended. We think there's a strong correlation between currency depreciation pressures in Asia and the strength of the physical market. Clearly, the threat of tariffs on China has led to some currency depreciation pressures there. And there are some signs that the physical market is finally reigniting again. That could lead to more central bank buying activity, but also institutional and retail buying out of Asia, which has been one of the big missing pieces for gold prices to continue making gains.
So you seem to point to very different factors in the gold market versus the silver market. Do you see something of a decoupling of the two metals in 2025? Typically, if I'm not mistaken, silver has tended to ride gold prices, right? And there's this ratio that people talk about between the two prices.
Yeah, absolutely. I think typically that's the case because investment flows, which are correlated between gold and silver, tend to drive the overwhelming variation in the supply-demand balance for silver. Silver is overwhelmingly an industrial metal. Solar has been a bigger contributor to total demand growth over the last few years in a very significant way. And so there is a decoupling that's happening under the scenes. But I actually would argue this is going to be a recoupling in the sense that silver is trading extremely cheaply relative to gold. And so from a long-term perspective, there's a long way to go for silver only to catch up to gold's price performance.
Okay, you see silver getting close to 40. What do you see gold doing in 2025?
We think gold is going to be fairly range-bound. There's going to be opportunities to trade it both ways throughout the course of the year. But we're actually expecting the Fed to remain on a prolonged pause in the first half of the year, and that could constrain some of these macro fund positions, which have subsided since the U.S. election, but still remain bloated. But towards the latter half of the year, we actually think the Fed is going to resume its cutting cycle more aggressively than is currently priced into markets, and so there could be some opportunities to buy gold throughout the year.
Daniel, thank you for coming in today.
Thank you, Paul. Much appreciated.
Daniel Ghali is Senior